Intel just rocketed almost 12% to become the single best stock in the S&P 500 today, and Wall Street raced to raise its targets one firm by 54%. But here is what the headline buries. Not one analyst actually upgraded it. They will happily move the price they would pay, but not the verdict that carries their reputation. The price moved. The conviction did not. Let's decode the gap. First, what actually happened? Because the catalyst is real. Reports say Google ordered millions of chips from Intel, and Nvidia is testing its newest manufacturing process. Quick translation. A foundry is a factory that builds chips other companies design, like a kitchen that cooks other chefs' recipes. Intel wants to be that kitchen for the giants of AI. On the news, the stock ripped and 5 firms raised their targets. Every number on the screen moved up. So why isn't Wall Street cheering? Open the hood. Start with the chart that frames the whole story. How analysts rate Intel. One bar towers over the rest. 32 of the 48 analysts who cover Intel rate it hold. Here's the distinction that matters. Analysts publish 2 different things. A target is where they guess the price could go, a number on a spreadsheet. A rating is whether they'll put their name behind owning it. On Intel, the spreadsheet moved and the verdict didn't. 3 months ago, 33 were on hold. Today, 32. On the stock's best day in months, the people paid to have an opinion barely moved. Now look at what did move, the targets. 5 desks raised them this month. Barclays by 54%, Citi by 37%, Benchmark and Wells Fargo close behind. But here is the tell. The 2 firms that raised their math the most, Barclays and Wells Fargo, kept their rating at the equivalent of hold the entire time. More upside on the spreadsheet, the same verdict on the business. When an analyst raises the number but freezes the call, the message is quiet but clear. The upside looks real on paper and unproven in reality. If this were a real turnaround, you'd see Intel improve across the board. So we score every chip stock on 4 traits and trace the shape. Lay Intel over the typical chip name, and the 2 outlines almost perfectly overlap on value, quality, and opportunity. By these measures, Intel is a perfectly average semiconductor. The only place its shape bulges out is momentum. And momentum just means a lot of traders bought it lately. It doesn't mean the business got better. Same shape as an average chip stock, plus 1 spike from the pop. That's a momentum move, not a re-rating. Zoom out to the whole chip group because June 8th was a sector-wide relief rally. Plot every name by today's move across the bottom against how much the data trusted up the side. If the market were rewarding quality, the most trusted names would lead. Instead, Nvidia, the highest conviction name in the group, barely moved up 1.5%, while the biggest pops, Intel and Marvel, sit mid-pack on trust. In plain terms, the names the data trusts least bounce the hardest. That's the fingerprint of a relief bounce in beaten-down names, not money deliberately buying the best businesses. Here's the bull versus bear case in one picture, where the stock trades inside the cloud of analyst targets. The floor is $80, the ceiling $140, a $60 spread that shows the street can't agree what Intel is worth, which is exactly why so many sit on hold. The average target is 116, and the stock already closed at 110, barely 5% below it. The cushion is thin because the price already did the climbing. Intel has blown past Barclays' freshly raised $100 mark. When a stock trades through the targets analysts just lifted, it isn't anticipating them, it's outrunning them. One last number keeps the story honest. After a double-digit day, you'd expect Intel to look overheated. It doesn't. This dial is the relative strength index. Think of it as the stock's speedometer, 0 to 100, for how stretched a move is. Above 70 is running hot. Even after rising 11.5%, Intel is only cruising at 55, squarely neutral. That cuts both ways. There's no overbought warning here, but a stock's best day in months arguably should do more. And Intel still sits 4% below its 20-day trend line. The pop didn't even reclaim short-term trend. The market decode read, "This isn't a call to buy or sell, it's a lens." On Intel, every number that can move on a screen moved up, except the one that carries the most weight: conviction. The targets, the estimates, even the price all climbed. The rating, Wall Street's actual verdict, did not, because upgrading is the call that goes on an analyst's record. So 3 things worth watching: whether analysts genuinely upgrade, lifting the buy count above today's 12 of 48, whether Intel reclaims its roughly $115 trend line, and whether that Google order becomes firm, dated commitments at the October 22nd report. Until then, the gap the headline hid stays open. The price moved, the conviction hasn't. If this helped you see the conviction behind the headline, do one quick thing: subscribe to Market Decode and tap like. One clear market story every single day.